Okay guys, in today's video I'm going to be talking about the top retail stocks to buy for 2020, and in this video I'm going to give you 5 good solid companies that you can invest in if you're interested in getting some exposure to the retail sector for the next year. So of course this is the holiday season, and we all know that most retailers make a lot of money during the holiday season, so I thought this would be an excellent time to kind of talk about some of the top retail stocks out there to buy for the end of the year and 2020. So what I did is I think it's much easier if you have all of the numbers in one place, because there's so many retailers out there, and I just wanted to kind of narrow it down to the top 5 ones. So what I did was I put together this chart on my website. Guys, I do have a blog. The domain is investortrip.com. I'm going to be updating this YouTube channel. My goal is to update this as much as possible, but some of the things obviously are kind of difficult to do on video, and sometimes you need content and text. So you guys can check out my website. Just click the link in the description to go to this actual article. So what I did was I ranked and I put together the earnings per share the most recent quarter for my top 5 favorite retailers. So we've got Walmart, Dollar General, Target, Costco, and Ross Stores. I put together their comparable sales growth, and I also put together the dividend. So I just want to quickly go over each of these stocks and some of the reasons why I like them. So let's just get right into it. So let's just start out with, well, we go to Robinhood, check out Walmart. You see right now Walmart traded at $118. Guys, this is one of the purest plays on retail in general. If we take a quick look at the 1-year chart, we can see. Okay, so we take a look at the 1-year chart. We can see that we started around this time last year at $90, and now we're up to $120. So, you know, a nice gain there. We've had basically a 29% gain. Not too shabby. If you bought Walmart, you're pretty happy with the progress. So I just want to talk about some of the key numbers that stood out in the Q3 report. So let's quickly go to that. And guys, you can find all of this information. You go to any company's website and look for a tab, usually called Investor Relations. They have all of this information there. So comparable sales, which are one of the most important key metrics in retail, grew 3.2%. But what I'm really interested in, and this is a really important thing for people to understand, because it seems like everyone's thinking that Amazon is just going to put all the retailers out of business, and that's just not true. So if we see this, Walmart US e-commerce sales grew 41%. So guys, like I was saying, every industry is going to have competitors, but it's never going to be one competitor that's going to take all the sales. So what we're seeing now is we're just seeing a switch. Instead of people just buying everything on Amazon, the people that shop at Walmart, they're just more likely now to use the internet to buy something. And the same with Target. So people as a whole are kind of just embracing buying things online. And Walmart actually has a really cool feature where you can buy stuff online. You can actually pick it up at the store. So these companies will continue to evolve. Their sales are continuing to rise. And I think all of these are very nice plays for the long term. So they raised their expectations for fiscal year 2020 EPS. Did very well. The total revenue is the revenue is very high, $128 billion. This is just for one quarter. Comparable sales stay strong. Like I was saying earlier, 41% growth in e-commerce sales, including strong growth in online grocery. So this is something I want to talk about, and I'm going to go talk about this in depth in a later video. But I think online grocery is a huge growth opportunity. I know everyone's talking about rideshare and everyone's talking about things like Uber Eats and food delivery, but grocery delivery is probably going to be even bigger. Yes, absolutely going to be bigger than food delivery. Because think of it like this. How many people go to a grocery store and buy the same thing over and over again? Grocery delivery just kind of lets you outsource the same stuff that you were going to buy. I don't know about you guys, but personally, when I go shopping, I basically buy the same stuff over and over again. Having an option to basically buy my staples on autopilot and have them to be delivered to my house or for easy pickup is just a game changer. And that's one of the things that Walmart's doing a really good job with. Sam's Club is growing, and you know, overall Walmart is just You're not going to get the same growth you're going to find in like a Tesla or something like that. You're not going to find the same growth that you would find in some high companies, but I think if you're looking for a retail stock with a strong brand that's changing with the times, more people are shopping online, I think is a wonderful stock. And of course, we go back to the chart, we can check out their dividend, a 1.7% yield. Not the greatest dividend, but it's decent. And as you can see over the 1-year chart, we've got plenty of growth ahead. And obviously, the past is not indicative of the future, but I think as long as Walmart continues to grow their sales in the U.S. and international, people continue to shop online, I think this is a very, very solid stock to own. So let's go into our second company, Dollar General. Now, Dollar General is very, very unique, and is that they're kind of like they have an opposite strategy of Walmart. So Walmart's main strategy is to basically put their stores in the busiest locations, right? They want to put their Walmart in towns in cities with a lot of people because they want a lot of foot traffic. Dollar General is kind of the opposite. What they do is they put their stores in rural towns. So I'm talking like in the countryside. I'm talking about places that Target, Walmart, and Costco overlook. Small towns with, small populations, maybe only 20,000 people, 10,000 people, 5,000 people in the town. And what happens with Dollar General is that these people become loyal to that Dollar General because it's really the only decent, retail option in their town. So I want to show you guys some information that kind of explains that a little bit better. Okay, so there's a very interesting article on Wall Street Journal, and it's titled "How Dollar General Became Rural America's Store of Choice." Other retailers focus on cities, thriving as thousands of stores aimed at lower income shoppers. So basically, what here is that the people living outside of the big cities are going to generally earn less money. So what they're doing is they're just offering things at Walmart for just lower prices. So it's a local Dollar General in Evansville, Tennessee. Higher farmland sells no fresh meat, greens, or fruit. 400 square foot sided store has most of what Eddie Watson needs. So as he says, it's just closer. We the Evansville Walmart. So basically, Dollar General is another very strong play in rural America. And that's where a lot of the growth is in America. Cities are saturated, competition is saturated, but a lot of Americans are spreading around, the population's growing, and Dollar General is well positioned in those areas. It points out Dollar General is expanding because rural America is struggling. With its convenient locations of frugal shoppers, has become one of the most profitable retailers in the U.S. and a lifeline for lower income customers bypassed by other chains. Dollar General Corp's 1,400 stores yielded more than double the profit of Macy's, and its $22 billion market value eclipses the largest U.S. grocery store chain, which has times the revenue. So yeah, guys, basically, Dollar General has a really strong strategy targeting rural America, and I just think that I love their strategy, and that's where most of the growth is going. Most of the growth is going to rural America because the cities are just flooded with people, and a lot of these people living outside of these big cities, they're being ignored. So here's also an interesting graph. We see low prices, big return. Dollar General's growth rate in net sales has been stable in recent years. So guys, while the net sales in Dollar General, the growth rates they're actually much higher than Walmart. Because like I was saying earlier, Walmart is a great stock to buy, and they're well positioned. But if you're looking for something a bit faster growing, you should look at Dollar General. So now let's take a look at the Q3 report for some. Okay, so Dollar General had a very strong quarter. They reported earnings a little more than last week. Basically, like I said, when I was showing you the Wall Street Journal article, their strategy is just so brilliant, and it's allowing them to go faster than Walmart's growing. So we got net sales increase, same store sales increase 4.6%, operating profit increase, earnings per share $1.42. And what I really like about this is $48 million returned to shareholders through share repurchases and cash dividends. Guys, share repurchases is a very, very strong bullish signal because of simple supply demand. If there's just fewer shares available, each of the remaining shares is going to be worth more. And that's a very smart way that a lot of management teams increase the stock price by simply buying back shares. So anytime a company's doing a share buyback program, we can think that pretty much as long as the company continues to stay profitable in the long term, we're going to see the price of those shares increase. So they also declared a repurchase program of $1 billion, and they do pay a cash dividend. So overall, a very strong quarter. Like I said, guys, this is not past results, not indicative of future results, but these type of businesses, people are going to be continually shopping in their stores. They're going to be continuing to buy products. So, I wouldn't worry too about the volatility of this stock. So, the dividend yield isn't as great as Walmart, but if you're looking for something growing a bit faster, so let's just head over to Robinhood, take a look so we can quickly look at the chart. So let's start at Dollar General. So we can just quickly take a look at Dollar General on Robinhood. Okay, so got a pretty nice chart here, 1 year chart, $104 a year ago. Now we're well up 45% over the year. Dollar General is one of the stocks I do own. I don't actually own this stock in my Robinhood. I actually own this using an app called Stash. I actually have a few partial shares in this. I don't have a huge position in this company, but I am planning to add more retail stocks to my portfolio next year. I've been very heavily focused on tech stocks, and I want to diversify a bit more because I love the dividend and I just love the steady growth of retail stocks. People are going to continue to buy staples and things like that. I mean, you're going to buy milk, you're going to buy bread, you're going to buy, diapers for your kids and stuff like that. And with these stores, the people in these rural towns, they really don't have any other options. So it's kind of like, they're really the dominant player in a lot of America's small towns. Okay. So the next stock on our list, I want to speed this up, I don't want this video to get too long, is Target. So Target is another, a little bit different from Walmart and Dollar General. Target is kind of more of a premium retailer. So their prices are higher than Walmart or Dollar General. I kind of wanted to separate, I wanted to start with those two first because I believe those are kind of your general type of stores. They sell, Walmart and Dollar General sell a lot of staples and things like that. Target sells more into things like clothing, stuff like that, and their prices are much higher, so they did really well as well. They had $1.36 per share in Q3. Comparable sales growth was 4.5%, and they actually have the highest dividend yield of the stocks listed on this chart. So I just want to show you guys quickly. Let's take a look at Target and Robinhood. So, okay, so we've got Target here on Robinhood. As you can see, Target was a big winner in 2019. The shares are up almost 90% as of recording this video. Target had a really good Q3. I'm going to show you guys some of the numbers there in a bit. And what I like about Target is that, simply compared to a lot of these other stocks, it just seems to have a much faster growth rate in terms of price. 90% is just a phenomenal gain. And their latest report, it really surprised people. So, okay, so I'm here at the Target Q3 report. Basically, very good across the board. Comparable sales grew 4.5%. Sales growth grew. One of the interesting things here is the third quarter compared to digital channel sales. So obviously, a lot of that is, online stuff, things like that. What here's interesting is got order pickup, drive up, and ship. So 80% of the sales growth was same-day fulfillment services. So guys, this is another major shift. Companies like Amazon, they're doing, one-day prime delivery, and while that's great, companies like Target are doing same-day pickup. So for instance, I could buy something online, right? I could buy like a couch or something like that. And then I can go to the store and I can pick up my order. Or I can like drive up to the Target. I don't even have to get out of my car, and they can place the item in my car. So this is just a change we're seeing. We're seeing that companies now are able to deliver the products much faster, and we're going to be seeing same-day delivery in the future. That is a big trend. You're no longer going to have to wait like days, sometimes weeks to get things online. This is a big trend in the retailers, and that's another reason I wouldn't worry about Amazon. People are going to stay loyal to Target. Yes, Amazon is a big competitor, but companies like Target, they're changing with the times as well. Another thing I wanted to show you guys, another thing I picked up was it was a very good report, and I like that this company is returning value to shareholders. So they do pay a dividend, but there's another key piece that I saw when I was doing some research, taking a look at this report. I want to quickly point it out. Okay, so this is a bit of old news, but Target announced a 5 billion share repurchase program. Once again, this is another highly bullish signal. Anytime I talked about the same thing that Dollar General was doing, Target is repurchasing their shares. Management is brilliant in using this to obviously increase the share price. So these are all the type of things we want to see. We want to see dividends increasing. We want to see shares being repurchased. You know, and we want to see basically the company changing with the times. We don't want to see things like Sears. We don't want to see things like Kmart. We don't want to see Blockbuster. We don't want to see companies resist change. We want to see companies embrace change. And as long as Target continues to embrace change with digital sales and things like that, I think they're a great investment. So that's why they made my top 5 list right here on the chart. So next is Costco. Costco is a little bit different from the first 3. They are actually a membership club. So very unusual to have a membership club at a retail store. Most retailers, you can just walk in and buy something. But actually to shop at Costco, you need a membership card. So what they've done is they've kind of separated themselves from the marketplace by requiring you to have a membership card. So this membership card, of course, gives you access to the Costco store. So now let's just take a quick look at the stock, and let's take a look at the chart, see how we're doing here. Okay, so Costco just released their latest Q1 2020 numbers, so I've updated this chart. Recent quarter was $1.73 per share, 5% comparable sales growth. So what I wanted to do is show you guys quickly some of the notes from the earnings report. So according to IBD, EPS, like I said earlier, $37 billion. Same store sales growth pretty solid. And e-commerce comparable growth 5.7%. So here's another interesting thing that I noticed about Costco. Costco's e-commerce sales actually took a hit. So perhaps having people have to have a membership is kind of hurting their e-commerce sales, because it's kind of weird to need a subscription to buy something online. So I'm kind of curious on what Costco is going to do about that. Most online retailers, you don't have to be a member of anything to purchase something, so perhaps they'll adjust that strategy, because all the other quarterly reports I read, e-commerce sales were up quite a lot. I'm talking 30-40%. So that's a bit concerning. But what I do like is that they're expanding into China. So China is gung-ho crazy about Costco. There's actually a really interesting viral video. I'll put it in the link so you guys can check it out. Of literally there was a mob and like a stampede in a Costco that opened in Shanghai. So they've already seen 200,000 memberships signed up, and as we know, people in China believe heavily in buying in bulk. So the fact that Costco is expanding in China will be a huge grower for the company in the long term, and that's definitely something to look at. So I think Costco is in a great position. If you want to, kind of invest in a store that's looking to expand overseas, internationally, then they're definitely an option. So one of the things is that Costco is actually a lot more expensive than the other stocks that I mentioned. And if we take a look at the 1 year chart, okay, if we take a look at the one, you can see that Costco shares are up 29%. So, you know, doing decently well, and I really like the expansion, and I think that's you know, that's a wonderful, wonderful, wonderful thing for this company long term. All the other metrics are great. This is definitely another top retail stock that you guys put on your radar. And finally, last but not least, I want to talk about Ross. So Ross Stores is kind of the odd man out of this group. So we covered Walmart, which is a big box retailer, Dollar General, a smaller rural competitor, Target, a premium retailer, Costco, a monthly membership retailer, and Ross Stores. So Ross Stores is actually an off-price discount retailer. Most of the things they sell in their stores are kind of like marked down items. You won't find Gucci, you won't find premium stuff in their stores. Gucci's not a good example, but basically it's basically for thrifty shoppers, shoppers that are looking to save money, shoppers that are on a very strict budget. But the recent numbers were very good. Most recent quarter, 5% comparable sales growth, and one of the lower dividend yields. But you know, it's good enough that if you're a dividend growth investor, you're definitely going to be interested in it. So let's take a look now at the hood. Let's take a look at the stock. So we go to Robinhood, you type in that I really liked during my stock retail research phase. Okay, so taking a look at the stock on Robinhood, you see the stock was at $80 this time last year, and now we are up about 43%. So one of the nicer gainers for the last 52 weeks. This is actually one of the much smaller stocks that I recommended out of the top 5. Only a $41 billion market cap, pretty solid price to earnings ratio, and so everything else looks good on this stock. I think Ross is a very, very interesting play. You can see here's a Business Wire quarterly report, and some of the good stuff that I saw in this report. Earnings, of course, earnings per share, very nice, $1.03. But what I also want to talk about with Ross is that they really have a good understanding of their target market, and I love the fact that this is another retail stock engaging in buybacks. Their goal to buy back $1.2 billion during fiscal 2019 in common stock. So guys, most of these companies are buying back stock, and what I'd like to say about this is that not only are they increasing sales, earnings are going up, but they're also buying back stock at the same time. So this would be alarming if revenue wasn't growing and they were just buying back shares, because that would be a desperate attempt to make the stock price go up. But management is clearly showing that they're making enough money that the stock looks at a bargain at this price, and they feel that buying back shares would return more value to shareholders. So that's it, guys. This video is gone over 20 minutes, one of the longer videos I've made, but I wanted to make sure I gave you guys plenty of information. So once again, please check out the link in the description to go to this page on the website. I've covered EPS, comparable sales growth, and dividend yield. Let me know what other metrics you guys would like to see on this chart. I am thinking about adding some other things like years of rising dividend for you guys that are dividend growth investors, some other things like that. Let me know what other numbers you want to see, if you want to see PE ratios or things like that, and I'll be considering adding these, because one of the goals I have with this site is to make it very easy to compare lots of stocks in one place, because I've noticed a lot of other channels and a lot of other news sources, they recommend a lot of companies, but the numbers are written all over the place, and my goal was to kind of make things very easy for you to see. It's so easy to compare these on a chart. You can clearly see the earnings, who's growing, who's not, and how you get a dividend yield, dividend payback. So that's it for now, guys. Let me know what you think in the comments. This is one of my longer videos. Let me know if you like longer videos or shorter videos. I'm really trying to do my best to tweak the content so you guys enjoy it most, because I'm making these videos for you guys so you guys can become better investors and make more money in the stock market and provide a better future for yourself and your family. So thanks, as always, thanks for watching, and take care.